Hey, good morning, everyone, and welcome to the Finance Auditing Committee of February 27th, 2025. I'd like to call this meeting to order. If you have a roll call, please.
Thank you, and good morning again. Starting with Director Dorsey, who's absent. Giudice.
Here.
Hernandez.
Here.
Maston.
Here.
Rodoni.
Here.
Vice Chair Parr is absent. Chair Rabbit.
Here.
President Cochran.
Here.
Thank you. You have a quorum, and you are still a committee of the whole. Also in the room, we have Directors Garbarino, Hill, and Spear, and Snyder.
Great. Thank you all very much for being here. We'll move on then to item number 3, which is ratification of previous actions by the Auditor Controller. We have Monique Spike with us today to give us from PFM to also give us their report. That report does start on page 7 if you follow along. Monique, I'll turn it over to you.
Good morning, everyone. So I'd like to start my comments and just say that we're about a month in to the Trump administration. And as anticipated and expected, I think a lot of the economic news over the past few weeks has really been in response to some of the policies, executive orders and actions that have come out from the Trump administration. And so I want to start my commentary on the yield curve, which is on page 10 of your packet, and just some big picture thoughts. The Trump administration, as anticipated, is hinging a lot of their policy positions on tariffs and the idea that increasing tariffs on imports will impact eventually the manufacturing sector. Now, what that has resulted in is some increased prices. And so the interest rate environment has responded to that. Since we've met, the 2-year Treasury has dropped. The 2-year Treasury currently sits at 4.08%. And what's notable about that is that the expectations for interest rates dropping in general has lessened. The Fed has basically stated that they are going to wait and see in terms of interest rate policy because they anticipate that tariffs are going to have an impact on inflation, and it's unclear how long that will persist. And so we went again from expecting a number of rate cuts this year to perhaps only getting 2. So interest rates are staying elevated and expect to be elevated for the short term. But why did we have that drop? I think it's just a matter of the market settling in and pricing in 2 rate cuts for the year, and we're probably going to stay stable for some time. Another thing that's notable is because of the tariffs and the number of different economic policies, the layoffs across the federal administration, consumer confidence has taken a big hit. We've seen consumer confidence drop fairly significantly. The reason why that's important is consumers have basically held up the economy for the past 4 years. Spending, despite higher prices, continuing to go out, spend that dollar. There's some concern now that with the tariff news, with the layoff news, that we won't see that same level and pace of spending, which will have a big impact on economic growth. So those are the things that the market in and of itself is paying attention to. I'm going to skip ahead a couple pages and just briefly sit on page 15 of your packet, which is the S&P returns. Investors as a whole are sitting on the sidelines. We haven't seen the stock market have much movement since Trump came into office. Despite the bump in November when he was elected, I think investors have basically settled in. So stock market returns have been flat so far for the year. Again, with the Fed basically sitting out this year and taking a wait and see approach, stock market and equity investors are really going to be focused on GDP and economic growth. And again, with consumer confidence taking a hit, you're going to see some, a little bit of a bumpy return in those markets. Now, I do want to talk about the portfolio, and we prepared some special exhibits on page 16 and 17 of your packet. And I'm going to start with 16. One of the benefits over the past few years has been the fact that interest rates have been high. And quite frankly, for the district, this has resulted in higher net interest earnings. The chart on this page 16 shows the 2-year U.S. Treasury, which is a great barometer for the income on average that we're earning in the district's portfolio for the longer term. And as you can see, over the past 2 fiscal years and fiscal year to date, we've had a very volatile ride in terms of where interest rates sit. But if you look at the table on the bottom, I want to call your attention to the net interest row. And you'll see in fiscal year 22-23, the district earned in total income interest earnings $6.6 million. By the next fiscal year, those had almost doubled to $11.9 million. So you are getting the benefit of those higher interest rates, and our strategy of taking advantage and locking in when we can has netted you real dollar earnings. And you can see fiscal year to date so far for 24-25, we're already at $13.9 million. Now where we see shifts is in the market value of the earnings, meaning that as interest rates go up or down, the market value of your portfolio holdings change. That's why we work very closely with your staff to ensure that we know what maturity needs are, so that we match cash flow needs to known disbursements, and so we're not having to liquidate securities unnecessarily. So we're not as concerned about the change in market value. On the next slide, 17, this is a little bit more of a complex exhibit. One of the things I wanted to highlight is that, as interest rates shift, the market value changes occur. And so we basically segregated the interest rate changes into 3 different phases. Periods of falling interest rates, where the 2-year Treasury is falling in general, or where the Fed funds rate is falling. Stable interest rates, where you're not seeing that many changes, that's in the green shaded area, and in rising interest rate environments where rates are going up. The lines in the chart represent, again, Fed funds rate, what the Fed is doing in red. And then we compare longer term strategies like the 1 to 5 year Treasury, which is, again, a good barometer for where we're investing your maturities, and pooled funds. Think your camp dollars, monies that you have in the bank, and what they're earning in gray. And then the table below basically talks about the benefit of longer strategies versus cash strategies. And we find that when interest rates are falling, or when the interest rate environment is stable, longer term strategies outperform. And so where we are today is in a stable / falling interest rate environment. We don't expect rates to change too much this year, but if they are changing, we expect rates to fall. And so what this really communicates is that the strategy of going out as long as possible with excess liquidity, matching investments to the areas of the yield curve where we find value, is going to serve the district well in the long run. And so that is what we have been doing with the portfolio. We've continued to take advantage of interest rates while they're high. We'll do that for as long as we can. And again, the strategy of meeting with your staff, talking to your staff about cash flow needs, ensures that you are well positioned both from a liquidity and cash flow perspective and from an earnings perspective. Going forward, we expect things to remain chaotic in terms of the economic environment. We are very focused on risk mitigation strategies in the portfolio. And so we're appropriately hedged on all sides, no matter what may happen. I'll pause there for any questions from the committee.
Oh, thank you, Monique. I'll look to my colleagues. Any questions of Monique on any clarification on chaos? Director Thayer.
Thank you, Monique. This is probably the question that can't be answered, but with all of the things happening in the Trump administration, is there any idea of what we're going to see long-term with interest rates?
That's a good question.
I apologize for the question.
I can tell you, I'll preface this by saying there's no clear answer, as you know, to this question. The Fed has 2 mandates: inflation and full employment. And if you think purely about what the Fed's mandate is they are incentivized to have higher interest rates if we're in a hyperinflationary environment. The reality is that the policies that the Trump administration is pushing, things like tariffs, they are going to raise prices for consumers. And that suggests that it is incumbent on the Fed to keep rates higher to help tamp down on an inflationary environment. That being said, President Trump is very much inclined to have a lower interest rate environment. For the Trump administration, their bias is lower interest rate environment helps spur activity, growth, investment. It seems they're less concerned about inflation. So what does that leave us with? It leaves us with two pieces at odds with one another. We know President Trump is trying to force Chair Powell out of his seat as chair of the Reserve. Right now, there's no clear path for him to do that without Chair Powell resigning. We know the Trump administration is pursuing legal action to argue that his inability to remove Chair Powell infringes on the executive branch of the government. We'll see where that goes. Chair Powell, without legal intervention and without resigning, is in that seat through 2026. We have some opportunities for President Trump to appoint some new governors to the Fed, maybe in a year or so. We'll see how this all plays out. But I think the Fed, in their current stance, has been very clear that they are resting on the economic news, on the market data, and they're not moving from their path. So right now, the market is reading that as truth, meaning the Fed is indicating maybe 2 cuts this year. And without, again, legal intervention or other intervention, that's what we're resting on.
Thank you.
You're welcome.
Any other questions for Monique? Monique, thank you once again for being here. Thank you for the information. Thank you for all the work. Very much appreciated.
Thank you.
So we do have 4 actions under item 3, ratify the financing and or the expenditures, ratify the previous investments, authorize the reinvestments, and accept the investment report from January 2025. And I'll look for first, is there any public comment?
I have no public comment on this item.
We have no public comment. I'll look for a motion to approve.
Move. Second.
We have a motion and a second, and we do a voice vote.
We can.
We can do a voice vote. We'll do a vote. And all those in favor, please say aye.
Aye.
Is there anyone opposed? Please say no. Hearing no opposition, that does pass unanimously with all present. Thank you. Just a quick note, there's nothing under items 4 or 5. We'll move on to item number 6, which is our fun times with insurance. This time, the marine insurance program, and Kelly Hopper is going to give us an update. Let us know what we're in for.
Good morning. A couple things. I'll just give some preliminary remarks and then kind of give a conclusion at the end of kind of where we stand. Let me just preface it saying it's not all bad news. So sometimes we give scary news when it comes to our insurance. We're looking for this committee to approve the renewal of our protection and indemnity for our marine service for 1 year, renew our hull and machinery, which includes a terrorism and risk insurance coverage as well in that one for a period of a year, renew our general liability in our marine environment, and then to bind some of these excess or umbrella coverages for our marine general liability and our vessel pollution. Very briefly, just to kind of provide a little bit of background, as you all know, our protection and indemnity includes almost all of our marine liability, except for those things that are covered by our Jones Act, which is our workers' comp that happens on the boat or the workers' comp. We're finding that this market is stabilizing. One thing we had to do, the broker brought us 3 different scenarios. And the scenario was, here's 20% increase. If you change your deductible slightly, it's a 10% increase. Or finally, if you will increase your deductible by $65,000, it's a 7.5%. And based upon consultation, this is what we're recommending: the 7.5% increase by slightly increasing our deductible for that coverage. The hull and marine is really what happens on our vessels at sea or any other kind of peril. That is a decrease. We're excited to report that's a decrease. And additionally, is at the end, 6 months after the policy concludes, if we have no claims, there's another 7.5% bonus back to us. So that could be quite positive. The marine general liability, that is slightly increased, and it's a good news situation. The reason it's slightly increased is because we're basing it upon a higher projected ridership this coming year of almost $1.5 million. So there's that increased exposure. So that's slightly increased. And then we have some of our excess coverage pickups that are to take care of us if we reach the max on our baseline coverage. So a couple things I just wanted to point out. Oh, and then finally, I'm sorry, our pollution liability coverage, which is kind of that buffer coverage for us. And it helps us with defense costs as well if we're in a situation. So finally, it's about a 2% increase. So this is great news for us. Given the history of coverage, as you all could be aware. So we're part of that steamship club, so we're part of that overall world club. So any one situation in our claim in our organization, it kind of gets mitigated over the club. So that's really a sign of our brokers at USI helping us be part of that club. We do want to note there is one high claim out right now. It's an amputation situation. It will probably be the highest claim in the district's history by the time we reach it. However, we're trying to resolve that claim this year. We've already paid the deductibles for this year, so we're hopeful. We're being reimbursed because we've already hit the cap, but we're hopeful that if we get that resolved this year, we won't see that moving forward in coming years. But there is a claim that will probably be coming forward to you all in the coming months. We want to make you aware of that. So finally, we're just looking for approximately $963,000, a 2% increase in this year's marine coverage. And I'm available for any questions.
Thank you very much, Kelly. Appreciate all the work on this, and I know that a lot of us do it.
Kelly Vitale and her, the brokers. This is
Appreciate the entire team. Thank you. I'll look to my colleagues for any questions. Director Maston.
Yeah. On the premium summary chart on page 34, I think I know the answer to this, but we're moving so quickly this morning, I thought I'd slow us down by asking the question. Anyway, the P&I line, from 24, 25 to 25, 26 takes a pretty healthy jump to 40,000 by 40,000, and the hull goes down by 30-ish thousand. I was just curious why such high differences between those years and previous years.
So during the COVID years, and we had claims that dramatically increased. There was instability in the market in those years, and so we were seeing that in our P&I. And so that's why you see that jump. It's a little smaller, I believe, this year. And then on the whole, that it went down. And that's an experiential. The district has been very, very good in their experience, as well as the club of claims, quite honestly.
Okay, thank you.
Mm-hmm.
Anyone else have anything? We're still waiting for that invitation to get to the club. Because what I picture is pretty cool. So I'll look to my, any other questions? I'll look to any public comment.
We have no speakers for this item.
So the item before us is to approve the renewal of the marine insurance program, and I'll look for a motion to approve.
So, second.
So we have a motion and a second, and again, we'll do a voice vote. All those in favor, please say aye.
Aye.
Anyone opposed, please say no. Hearing no opposition, that does pass unanimously with all present. Thank you. We'll move on then to item number 7, which is to authorize the execution of the amendment to contract number 2023-D-075 Grants Management Professional Services. And Jennifer is going to give us the overview on this one.
Good morning. This item is to ask for first amendment to this contract 2023-D-75, which is really your bench consultant services for grants in the capital and grants department. Due to several vacancies we've had over the last year, we've needed to utilize our consultant services more rapidly than we thought we were going to when we went out with the bench. So this action really is just to request additional funding. The time frame on the bench is still the same. We're asking for an additional $700,000, which will only be used obviously as needed or as budgeted. we are planning to expand this bench, so there will probably be a new RFP, so that we'll have a little bit more diversity of scope in the work in the future. But to get us by, I am here to request an additional $700,000 to get us through until we can get a new RFP to have a little bit more different set of services. Happy to answer any questions.
Great, thank you, Jennifer. Any questions, Jennifer, on this one? Seeing no hands raised, I'll look and see if there's any public comment.
We have no public comment on this item.
And I'll look to my colleagues for a motion to approve the execution of this amendment for the grants and management professional services.
So moved.
And with a second,
Second.
we have a motion and a second. And again, voice vote on this. All those in favor, please say aye.
Aye.
Is there anyone opposed? Hearing no opposition, that does pass unanimously with all present. Thank you. Moving on to 8, authorize the general manager to execute agreements with values up to $250,000. Jennifer?
Yeah, but this one really, it's kind of like an administrative modernization, not necessarily cleanup, but currently the general manager has up to $250,000 to commit for the district on contracts. This just expands the authority naturally to just agreements. They're contracts, but because they're not actually agreements specified in the original action, we're just expanding it as an umbrella to that. It will be included into the quarterly report we already have on contracts, and we'll just add that to agreements. So, you know, interagency MOU types, but not necessarily contracts. So we just wanted to clean that up administratively. Happy to answer any questions on this as well.
Great. I'll look to my colleagues. Any questions? Seeing none, is there any public comment on this one?
We have no public comment on this item.
And bringing it back, looking for my colleagues for a motion to approve.
So moved. Second.
We have a motion and a second, again, on a voice vote to authorize the general manager to execute agreements with values up to $250,000. All those in favor, please say aye.
Aye.
Is there anyone opposed? Please say no. Hearing no opposition, that does pass unanimously with all present. Thank you. And not lastly, but our last action item, which is renew annual delegation of investment management authority to the auditor controller in the investment policy of the rules of the board. Jennifer?
As you can see, staff's been busy. We're trying to clean everything up and make sure we're ready for the year. This is your annual authority for the auditor controller to manage investment management authority. Due to California Code 53607, it's a requirement that you do the approval on an annual basis. So that is what is attached here for you. There's also the district investment policy from PFM, who's the district investment advisor, attached to this item. Again, happy to answer any questions.
Looking to my colleagues. Be straightforward, looking if there's any public comment.
No public comment for this item.
No public comment. Coming back to the board and looking for the committee, looking for a motion to approve.
The item, Mr. President.
We have a
Second.
we have a motion and a second, and all those in favor, please say aye. Aye. Is there anyone opposed? Please say no. Hearing no opposition, that does pass unanimously with all present. Thank you, Jennifer. Moving on to the status report of the 24-25 budget.
All right, so on this item, on page 53, you'll recognize that we always on a monthly basis kind of do the rundown of the 36 million on paper as a deficit. We did add something new this month, so wanted to just call out, as we state in the budget on paper, we start out with a $36 million shortfall. The current I'm going to say shortfall right now as we're running through the year is only at 12.8, but I always talk to you guys about, we call Alice's magic money or the unrealized market gains. So we added that below the line just to see that, you know, we always talk, it's hovering about $5 million. So if that unrealized market gains, because that fluctuates from month to month, doesn't actually come to fruition, you're realistically looking at about an $18 million shortfall. So just kind of giving you that ballpark that we've been talking about verbally. But other than that, that's just the update. We're actually doing very well. And as we go through the half year mark, this is actually what we're expecting more in the ballpark. So we're feeling pretty good about it.
Great, thank you very much. Looking to my colleagues. Anything? No hands raised? Is there any public comment on this one?
We have no public comment on this item.
Want us to keep going, Jennifer, and obviously the monthly review of the traffic tolls.
Yes, we did the quarterlies last month. I wasn't planning to go through any of them unless you had specific questions, but you know, as of note, the traffic and bus patronage and ferry patronage, everything is up this month for January. So we're pleased about that. Happy if anybody has any specific questions, otherwise.
Anyone have anything for Jennifer on this? And I'll take public comment jointly here in a minute, but why don't you just keep rolling?
Again, you got your financial statements on 12A, which is your cash flow. You've got 12B, which is our 7 months for the capital program expenditures, which is looking similar to last month. So I have no further comments on those information items unless you have questions.
Are there any questions, Jennifer, on those? Seeing no hands raised, I'll ask if there's any public comment on the last two items. And then
Yeah.
moving into public comment overall. Is there any?
We don't have any public comment for the items itself. We're gonna move into public comment, and I'd like to poll one more time, just in case there's been some flipping on the public line.
Okay,
Make sure that there's no one that's joined that wants to speak. So if there's no one in the room, but Justine, can you poll the public line to make sure that we don't have any speakers for finance?
Certainly. Is there anyone who's joined us that would like to speak at the Finance Auditing Committee meeting this morning? Please press star to unmute yourself and let me know. Again, if you'd like to speak, please press star on your phone to unmute yourself and let me know. I am not hearing anybody this morning, Madam Secretary. Thank you.
Here.
great. Thank you very much. And with that, motion to adjourn.
Move.
Moved, seconded, and all in favor, everyone, thank you. See you next time.